Hello, everyone. Welcome to this week's YouTube live session. Today, as usual, I'm with Matthias Richter, this side, from,
I'm right here.
from Financial Imagineer. Some of you might join us from YouTube. Some of you might join us from Facebook. And if this is your first time coming here, I am Yasi. I am the creator behind Fast Track. So we have a podcast. You can search Fast Track Podcast on Spotify and also on Anchor. And it's also a content platform where I talk about entrepreneurship, money, and career. And I have guests coming over to the show, share their personal experiences and learnings with you. And one of the topic is money. So therefore, today I'm with Matthias Richter, who is the creator behind Financial Imagineer. It's a blog website where you can learn all the tips and tricks about money from Matthias himself, therefore helping you to Imagineer your life financially. Hello, Matthias.
Hi, Yasi. Thanks for having me again. It's great to be back on a weekly basis.
Yes.
What are we going to talk about today?
So today we're going to talk about one of the most popular things, and one of the mostly talked about topic is gold.
Absolutely right. So gold, I don't know who of you ever had some gold in your hands. So gold has been a valuable asset for thousands of years, as long as we can remember. I don't know who found gold first, right? But you can imagine the first human who got a gold nugget or something. And somehow over many millennia, so over more than thousands of years, gold has actually remained valuable. It's actually incredible. There has not been anything else like that except food or food-related things that has been so in demand over such a long time. And today we're going to cover a few things about gold. Like first, maybe why gold, why it is so interesting for us, right? Why we attribute value to it. How is it correlated to the rest of the whole asset market? What is actually ways that you can buy and sell gold? What do you have to look after there? What are different ways to get exposure without maybe buying gold itself? What concerns some people may have? I want to quickly touch on the cryptocurrency space and come to a conclusion to end of today. So sorry, there's a lot of things we have coming up. And as usual, if you have any questions, feel free to hit the comment section and click something in there, hack onto your keyboard and ask us anything. We will see it. And this is a live session for a reason, so we can react and help you if you have any questions.
Even if you watch it replay, you can maybe some of the questions have been asked by the other viewers. And if you have other questions, you can always send us an email, and all the links of our website will be in the description. So my first question to you, Matthias, touching on the gold. Do you invest in gold?
I do invest in gold mining shares and gold mining ETFs, so not directly in gold for myself. And for some portfolios, we do some options on gold, which is also a highly interesting thing.
And what do you mean by gold options?
Gold options, you can actually sell puts or calls and have structured products on that, which is a whole new kind of thing. You can actually make gold work for you, because some people have a concern that gold is not productive. So it's something that is just lying around, but actually you can activate it by doing derivatives. But I think this is maybe more for like advanced class. Yes. So
why do you invest in gold, or why do you think who should invest in gold?
So it has been something that has been around for as long as we can remember. And we have, on one side, we have all the paper money that comes and goes. You see that even in the last century, very advanced economies, they had many currency reforms. Just looking at in Europe, you can look at neighbors of Switzerland, which are like France or Germany. Every once in a while, there was a currency reform. Old money left, new money came, some zeros got eradicated. So maybe if you want to learn more about inflation, you can check our last week's session, which was all about that. And I think gold is something, no matter what is the currency of the day or what is the fancy thing of the day, it remains somehow. One can argue that gold is not productive and it's not really a good, how to say, like it doesn't perform, but at least it's something stable. It's something, no matter what happens in the political world, it provides a certain amount of safety, or the feeling of safety.
What do you mean by safety? Why it is safe? Why to have gold is safe?
It's something like that you dig out of the earth and people attribute value to it. If you go very, very much back in time, you see that people did the same thing before with clamshells and with coconuts and with other stuff. But gold is something, it's not easy to kind of replicate or duplicate. And there's just that as much around. And it's something also, no matter if you go to India, to China, to the Americas, no matter where you go, gold is something people respect for what it is, and it's something that you can exchange. People are willing to give and take and work with gold and accept it as a form of payment eventually.
Mm. And in terms of intrinsic value by gold, do you think is it gold served as a value preservation purpose, or gold can also be served as a like investment for value appreciation?
I think there it depends. Like if you buy gold, you always have to look at where in the cycle are we, what is going on with central banks, where do you stand on many levels. Gold is not just something like a share that produces goods, but it's something that can be used kind of as a hedge against other values. And it is something that is pretty much, it's all about supply and demand. And the demand is usually here when people get more afraid, and then, or when people question like the economic system. You have seen like the highest gold prices happened when there was hyperinflation, or when like in the late 1970s, after the oil crisis, gold rallied up tremendously. And also after the great financial crisis, gold went up a lot. Now again, it seems it peaked out just north of $2,000 per ounce. It's somewhat lower at the moment, but it's something whenever uncertainty hits the market, people try to find shelter in gold. And therefore, it's so hard to say what's a fair value of an ounce. It's supply and demand. It's people will have to find that value. And if people are more afraid and panic more, gold goes up. If people are more relieved and happy with what's going on, then gold will usually drop in value. And it's also something, if you think of holding like some cash, it can be something that you can consider holding parts of gold-related assets instead. People think of cash might lose its value to inflation or to an unforeseen currency reform. Gold most likely will still be more or less there.
And you mentioned that it kind of reacts towards the central bank policy or the demand. And how would the gold price fluctuate? Do you see in short term it always reacts towards the market, or in long term it has a potential to gain in value over time?
If you maybe look back like a few decades, how much was the price of a house, or how much was the price of some food? And if you put it in some kind of gold kind of currency, it's not unchanged, but it's less fluctuating than with real currency. And if you look at it, it can somehow help you to protect your purchasing power over very, very long periods. I say it's really with two varies, because it's something over the cycles. But in the short term, it fluctuates as well. So it's something, if you buy it, if you're not speculative, you have to have a very long breath to hold it and make it work.
Yeah. So in a way that gold is for really long term, and then if someone wants to build up wealth through investment, would you think gold is a good investment?
No, I think if you want to build up wealth, and if you're at your start, gold is not something that will help you grow your wealth. It is rather something that helps you protect your wealth, protect you what you have achieved. And it is also something, let's just think about war or like very, very big political uncertainties. If you have two countries that are angry at each other or preparing for certain action, you never know which one is going to win. And then, of course, people will try to figure out ways to kind of secure the money. At the moment, luckily, we are not in this situation quite yet. But you never know what the future will bring. And so imagine you go into the Second World War. You don't know, is it now Russia will win? Is it the Western, the Allies that will win? Is it the Nazi Germany that will win? Which currency should you hold? Which paper money should you hold? If you have gold, it doesn't matter, because whoever wins at the end, you still have your gold, and you can probably convert it back into some form of payment eventually.
And last week we talked about real estate can protect you from inflation. Can gold
yes.
play a role?
That's exactly the big point. And the big difference between real estate and gold is gold, unless you buy a lot, like tons of it, you can put it in your pocket or a backpack and move it. Real estate, you cannot wrap up your house and change the country, right? So you will have to transact, you will have to sell. So the big difference is there, like how liquid is it? And gold comes in many forms. Like banks, they have the standard gold bars that are like 12.5 kilograms. They're like this big. I have had some of them in my hand before in my banking career. Or the 1 kilogram bars, they're like this big. One of those is roughly like 50,000-60,000 US dollars, depending on the market price. And it's actually quite small. You could put it in your pocket. That's it. It's 1 kg. It feels heavy. But if you want, actually, the only inconvenient thing is, let's say you really have war and tomorrow you want to buy a loaf of bread or exchange your 1 kilogram gold bar for some food. How to pay, right? You
stretch a little bit.
Yeah, just maybe shave off a little here, a little there, right? So there is some very interesting things, actually. In Switzerland, you can buy like gold that looks like gold bars. I'm not talking about the stuff you get at the airport where you can crack and it's actually chocolate inside. No, it's actually gold that you can actually click, and you have 1 gram or half a gram kind of portions. It's manufactured for the very reason that in case something really cracks down, that you actually can use it to pay stuff.
Interesting. I thought when something really happens, you need to store a lot of small bottles of alcohol because that will become the currency.
Yeah, there could be many. I think that will also go up in value, right? Exactly, yeah, toilet paper we have seen last year. So this the oldest things that will go up in value eventually. And gold is here to stay for that reason, right? It doesn't matter what will happen. If you have a little bit gold, I think you will, no matter, like I said before, no matter what culture you go, what country you go, there will be people who will accept it as a payment. And you don't have...
silver then? How about silver?
Silver is similar. Some people call silver the poor man's gold. Silver is more interesting in a way for optionalities. If you compare gold and silver, silver has much more volatility. So if something happens, like central banks are printing money, gold goes up, but usually silver goes up more. And however, it's delayed. Its action is usually delayed. And actually, earlier this year, you have seen the Reddit gang that went after GameStop. They also tried to push up silver. So they were also in that market. And silver, it's a form that can help do the same thing. However, if you have larger amounts of wealth, you need much more silver because 1 ounce is maybe just around $20 to $30, right? And the gold ounce is at the 1,760 US dollars at the moment. So you need much more space and like storage. And that's also something then you have to be concerned if it comes to how mobile you want to be with that and how flexible you want to be, if you want to move it, or also how you can safeguard it in case of war or riots. You don't want to have like a shit ton of silver behind you and everyone sees it. You want to have something small, right?
Yeah. And in terms of invest in gold, there's a gold ETF. There are physical gold.
Yes.
What are all kinds of like formats that people can expose to gold?
Okay, one thing is, like you just said, physical gold. You go to a gold trader and they will ask you how you would like to have your gold. You can buy it from 1 gram to 12.5 kilos. That's usually the standard. You have ounces, you have the 1 kilo bars, you have all kind of different gold bars that you can purchase. One thing is usually if you buy that, there's a big bid and ask spread. So you actually lose money if you transact a lot. There's a production cost involved eventually. Sometimes the banks charge you production costs. Then also, like if you hold it, you want to keep it somewhere safe. So you have to eventually pay some people to keep it safe. So safeguarding. And there is a whole industry around that as well. Because let's say in a bank, I will maybe come to that later. In a bank, if you want to have gold bars, you can have like a safety box and put them in there, right? Or if you don't want that because you may be afraid, what if actually you're not very close to the bank and you want to make a phone call and trade? You can actually safeguard it somewhere centralized with the bank. And the bank actually tells you this is your physical gold. Then the bank, even there, they have usually different services. One is the gold is held in like common custody. So that means if you, Yase, buy 2 kilograms of gold, they will just tell you, yes, we, the bank, we hold 2 kilograms of gold for you in a big safe. And if you want to have it more specific, the bank actually, for a little bit more money, you can actually get the gold bar register numbers in a safe box somewhere, and you can actually go see your gold eventually.
Oh, you know, I visited one of these facilities in the mountain in Switzerland where it's a bunker and there
Yes.
people store physical gold. But I didn't get a chance to look at it. They didn't open the door for us. We just walk in the tunnels and it's really inside the mountain.
Yeah, I think Switzerland, they have a lot of old military facilities where they safeguard a lot of different things, right?
Yeah. We have, by the way, we have one
Hi, Tony.
comment. Yeah,
Yeah.
we have one comment from Anthony, and for the viewers from YouTube, you might not be able to see. So this is a comment from Facebook. Matthias, would you like to address that comment?
Yes, so Tony is saying that gold is used a lot in electronics and therefore it holds value, yes, and much more than silver. Yes, agree. Also, if you talk about the usage of like industrial materials, you probably remember platinum. Platinum constantly used to be more expensive than gold per ounce. Currently, it's no longer. They used it a lot in like catalysts and so on.
But it's still more expensive for the jewelry. Platinum is more expensive than gold.
No, it's not. Currently, no. No, it's below gold at the moment. Palladium went up a lot, and it's also like it's an industrial material, and depending on what they produce, yes, they will need more of that. And gold is actually very good because it has a very good a value for like electric currents, and it's in many things indeed. And some people do their teeth with gold, right? But that's not things we are talking about today. But it's there's so many uses of what you can do with gold.
And
but maybe to come back.
This gold mask.
Yeah, gold. Yeah, even that, right? Even like face masks. So yeah, physical gold. Physical gold is one thing, and you can also take your gold bar home, right? You go to the bank, you buy it physically, you bring it home, but then you run the risk that somebody knows you have a gold bar at home and it might get lost or it might get stolen from you. So that's bad. If you want to have cheap access to physical gold, another way is you buy an ETF. That's an exchange traded fund. There you have to be very careful because you have to make sure your ETF is actually holding gold. And to explain that, there are certain products, some financial products, that give you upside exposure for gold price or gold performance, but behind the curtain, they don't have actual gold, which is a little bit contradictory. But maybe to tell you why it is like that, if you put all the gold that has ever been taken out of our planet Earth into like one place, 2 Olympic pools, this is like 50-meter pools filled with gold, that's everything you'll ever have. That's the gold of planet Earth that we have at the moment. It's not a lot. It's actually very little. And now, if you look at why, if you look at the numbers, like the FX market is the largest and most liquid market in the world, how much actually gold transactions make there, it's tremendous. And there is actually much more gold that is being traded. So how does that happen? So there are certain products, not necessarily ETFs. You can also refer to it as paper gold. So banks sometimes issue XAU. It's like an own currency. So the bank will issue gold certificates, but actually it's simply paper, and the bank is the issuer of that gold, but you don't hold physically gold. So if something were to happen to the bank, there's nothing left, and the bank has the risk to replicate that price action for you.
When the bank issue paper gold to you, does the bank need to hold the physical gold to back it up?
No, they don't need to. That's why you have a couple of hundred times more gold in the world than the actual physical gold, because all the demand for trading and doing stuff with gold is so much more than these 2 Olympic pools of gold. So there's a huge derivative market on that, which is big business. Yes, a huge business. And the downside is XAU sounds shady. Tony just wrote XAU sounds shady. It's actually oftentimes used because you also have convenience. XAU or paper gold, you can actually do options on it. So like investment banks, they can create structures around it. And you can also, with a simple phone call, you can buy and sell it. And there is a gold spot market that gives you the price of gold more or less real time. You probably have $1 or $2 of bank spread that you have to consider, but that's about it. And if you go with physical gold, you cannot transact it like that.
So to help me understand is that the banks issue paper gold, which they don't have the same amount of physical gold to back it up, but they create this paper gold so that in the financial market, people can buy and sell and then toss around.
Yes, correct.
And then there's banks or whoever trading facilities earns the spread because of the transactions. But in reality, there's no physical gold is backing all these transactions.
Yes.
But it sounds crazy to me.
They have, of course, a balance sheet. They need to have capital booked in the bank, and they have the license to do this. So perfectly fine. But yes, there is a risk.
Maybe I only understand part of this whole system. So my other question is, besides paper gold, what are other ways that people can indirectly or directly have investment in gold?
So yeah, with paper gold, you probably have the most flexible solution, but also you have to be aware of the risks. And if you think that's also nothing for me, another way could be gold miner shares. So instead of buying the gold, you simply buy the company that digs the gold out from the earth. And there are a lot of gold miners that are publicly listed. So you can buy shares of these companies if you want to. To generalize, there's even an ETF. The ETF is called GDX, Gold Delta X-Ray, GDX. And that ETF buys all kind of gold miners, and you get actually a little bit of all of them. And you participate, especially like gold production almost came to a halt after the financial crisis. If actually the gold mines, they don't keep digging out and producing the gold if the price goes down, because it's not sensible for business. But if insecurity happens, it's usually super interesting to look at gold miners, because then the marginal cost of production will kind of determine from what moment on will the gold miners start to like bring in more supplies again. So, and then usually when the margin for 1 ounce is maybe $100 or something, there will be maybe more gold mines start to produce. And if let's say you bought gold at maybe $1,200 when like 2-3 years ago, before now Corona and all that started, you probably can make all the way up to 2,000, which was the high. 2,000 plus was the high. So you can almost double your money. But with gold mining shares, the GDX, it went all the way down to $12. You could have bought it there, and it surpassed 40. So it almost 4x'd, three times plus X. The interesting thing is when you catch the upwind of such a gold rally, the gold miners usually have a beta of roughly 3. And this is interesting. Now, sorry, I hope I'm not confusing people here.
Please explain the beta of 3. What does it mean?
That means if gold go up 10%, gold miners go up 30%, 3 times as much.
Yeah, it's more volatile.
And the interesting thing, at the beginning, you asked me, how do I have gold exposure? I like to have it with gold miners if I think it's interesting, because if, let's say, you wanna hedge like 10% of your portfolio, or I make it easier, let's say you wanna hedge 15% of your portfolio, you can as well just buy 5% of your money in GDX. Because if it go up 3x and you think gold is doing well, with just 1/3 of the money, you get a similar, I'm repeating, it's not equally correlated, so it's similar, it's not the same, but with 5% exposure in gold miners, you get a similar protection like if you buy 15% of gold.
So in a way that you expose yourself still to the gold movement, but you don't have to invest a larger amount in to have the exposure.
Exactly, yeah. And that frees up another 10% of your portfolio, but you can do different things again. So you can stay invested or have cash or do something else, which is adding more value to portfolio management in a way. But beware, gold miners also drop with a beta of 3. So if it goes down, you're on the same train. It just goes the other direction at the same speed.
Are there any other ways to get exposed to gold?
Well, then you can go in options, right? If you think, okay, I want to have gold options, that's like a call option. There you have to look at the volatility in the market. If the market is already panicking, then the option costs you more. If the market is calm, you get exposure for less money. So you can buy an option and say, I wanna have exposure to the upside for 1 year or 2 years, and then you actually just do it like this. There you need much less money than with gold miners again. So you can do the same thing with even less money. But you need to have the facilities to do that. Some banks, they need some minimum amounts to help you transact gold options. And there are like warrants and other things that can help you as well.
Yeah, for advanced gold investors, please book a free 30-minute call with Matthias Richter on his website.
I can confuse you for hours. No.
So now we talk about gold, and then the new gold, which yes.
So we are almost running out of time. Sorry, I love
no
this topic. So cryptocurrencies. Some people now say, oh yeah. Instead of gold, why not buy cryptocurrencies? This is the new gold, right? Because they say gold is the old world, cryptocurrencies is the new world. Are cryptocurrencies actually replacing gold? That could be the question here. And there, the same things apply. It's people look at it like unproductive, right? And then I say no, not necessarily. You have some cryptocurrencies that you can actually use for payment services and so on, so you get a yield on it. It's not necessarily unproductive, but the thing is, it could be risky in a way that regulators change. Believe it or not, there was even in the past, there was a time in the Great Depression, before Second World War, where in some countries it was forbidden to hold gold. The government made it forbidden, right?
Okay.
And for that, it's incredible. And for Bitcoin, that could also happen, right? So if the government say we no longer want to have like allowing that, they can change the guidance. But this will be another story, right? What will happen there? Is it a better gold than gold itself if you buy Bitcoin? I think the big issue there is stability. So people for gold want to have stability, and Portugal reviews say it was the US, exactly. So they took away the gold of people. And in the US, actually, another thing, sorry, I keep flipping the topics. For the Bretton Woods system at the beginning of the 1970s, they used to have a gold standard. So all the paper money they issued was backed by gold. But when they needed more, they kind of let go of that. So gold is up to there. It was still super important. But now to come back to Bitcoin, people looking for stability, they will be actually afraid of the high volatility of Bitcoin because it goes up and down very, very fast. And one thing is missing is the clear long-term track record. It sounds boring, right? But if you go 10 years, 20 years back, 10 years maybe, yes, you would have had Bitcoin. But if you go 20 years back, people wouldn't know what it is. And who knows where Bitcoin will be in another 10 years. It's a lot of innovation, a lot of creative new solutions there. But it's maybe not replacing the gold quite yet, because if you think of Bitcoin, you could probably turn off the power. Some people say it's using too much power. It's Bitcoin actually uses as much power as Switzerland and Austria combined. So just to keep the whole ecosystem alive, and that's incredible. But I also don't know how much does the US dollar system consume in terms of power. We don't know. Nobody compares it with that. So what do you compare it with? That's the big question. But there could be some groups that will have some reasons to try to shut it down. So I think stability and long-term gold still wins on these two. But for innovation and maybe new solutions, cryptos could be interesting.
It's very interesting because now they say Bitcoin is the new gold, but since in the whole session we talk about the gold is for very, very long term, and then to keep your value, not for the volatility for capturing the short-term gain. But on the other hand, Bitcoin, since the beginning till now, the big trend is going up. It's very volatile, and the value has increased so much. It's completely the other side of the performance compared to gold.
Yes.
Let's see. So today it's end of April. So the Bitcoin price, I think, is around 50K Swiss franc. Let's see how much will it be a month later when we still do we will do a Bitcoin cryptocurrency versus what is another topic?
Fiat currencies, right?
We will talk about the traditional financial world versus the crypto finance, and then it's going to be an interesting discussion or debate. Let's see.
Yeah. Oh, thank you. Portugal reviews also say 70-ish% of the mining is taking place in China. That's also true. I think there have also been some attempts trying to shut it down because it uses a lot of power that is still largely made with coal. So it's not so beneficiary for the climate change, right? But yeah, maybe to conclude, I would say gold could be or should be an important part of a well-diversified portfolio if you plan long-term. And it's not for growing your wealth, it's more for keeping your wealth. It's something you can consider if you think that's, you can no longer be in the growth segment of investing. And maybe at the moment it's interesting also if bonds are not really interesting with negative interest rates and so on. It's usually helping you to secure your purchasing power. It can even be used if the power is off, right? If war breaks out, you can take it along. You don't need your cell phone to transact Bitcoins in a war zone. You can have gold. So for the really, really bad stuff, gold still has actually its place there. And it's been proven over centuries. So it will be hard for something new to take over there.
My last question to you is, for someone who just get started investing, is gold or to build up the Are we back?
I think we are back. Yes.
Sorry, we lost you guys a little bit due to connection problem. So I think that's the end of today's session. I hope you enjoy it. If you have any questions, feel free to email us or leave a comment, and we will be here next Wednesday as well. If you would like to learn how to grow your net worth and understand what is net worth, then we will have a free webinar this Friday. You can register it. I'm going to put the link in either below the video, in the comments, or in the description. It's 1 hour long. It's very interactive. There you can learn what is net worth, how to grow your net worth, and how to track it. So I hope you guys can join us on Friday. If you are interested in learning everything at one go in one whole package, we have a fast track money course, which is going to launch in the 3rd batch, starting from 4th of May. It's on the website fasttrack.life/money course. There you can register, and we are going to take you on a 6-week journey, helping you building up your personal finance knowledge and give you the toolkit, and also giving you the knowledge and all the processes and the things that we learned along the way, and helping you to succeed. Anything else to add, Matthias?
Maybe, just for the net worth course, the net worth webinar, please sign up. It's really cool. We are on Zoom, interactive and chit-chatting amongst friends, learning about how to grow it. So I think that's the next stop. And next week, maybe to close, the topic will be very interesting because May is coming. And maybe you have heard it. Some people say, sell in May and go away, but remember to come back in September. So it's like these kind of wisdom nuggets. Are they true or not? It's something like an investment myth. And next Wednesday at 7 p.m. Central European time, we're going to talk about sell in May, go away. What is behind that? Hope to see you there again.
Yeah, thank you guys so much for being here with us. And if you're watching this replay, also, I wish you can join us in a live session, and have a nice evening, and join our webinar.
Yes. See you guys. Thank you. Bye.